Hello everyone. Welcome back. Today, we've got some crucial news you don't want to miss. Let's dive right into the top financial headlines and break down what's happening. CNBC report, this fund manager warns that investor confidence in US stocks could spell trouble. So, there's this fund manager who's raising some eyebrows about the current mood among investors regarding the US stock market. It seems like everyone believes that stocks can only go up, and that kind of one-sided thinking could lead to some serious risks. The price movements in gold and the overall vibe in that market got me thinking about this too. There's a strong belief that gold will only keep rising, and that can be dangerous. According to the report, investor optimism is through the roof, and with stock valuations at lofty heights, the market's in a pretty fragile spot. The Dow just hit its 39th record closing this year, while the S&P 500 is just a smidge, 0.3%, off its peak. The Nasdaq? Only 1.5% below its high. There's been some volatility lately, but every time the market dips, investors seem to jump back in. This stubborn market performance has caught the attention of Michael Grant, who's the co-CIO at Calamos Investments in Naperville, Illinois, managing $37.3 billion as of the end of 2023. Grant points out that one of the most notable features of this year's investment landscape is that US stock investors feel almost invincible. Part of this sentiment comes from the global economic divide, making big American tech companies look especially appealing. He calls this a dilemma because it signals that market emotions are hitting a peak. Historically, this kind of invincible mentality tends to show up when markets are on a high. He acknowledges that, aside from major shocks like the pandemic, it's often tougher to spot market tops compared to bottoms. Market bottoms usually come with signs of stress in the fundamentals and a lot of panic from investors. In contrast, this optimistic mindset could stick around for a while. Peaks in the stock market can often last longer than expected, with different sectors and styles rotating until the narrative runs out of steam. That's when we start to see signs of that invincible syndrome. Grant also highlights some interesting data that supports this observation. For instance, the Shiller P/E ratio for US stocks has shot up to over 35, marking the third highest level ever. That usually only happens when bond yields are extremely low and not sustainable. The median P/E for the S&P 500 has hit 28, a level we haven't seen since the internet bubble back in 1999. On top of that, the price-to-sales ratio is back to where it was during the market highs of 2021. He mentions that American consumers have the highest expectations for stock market performance over the next year than we've seen in history. According to Mark Hulbert, who tracks financial newsletters, the bullish sentiment is at its highest since 2000. Grant suggests that while investor sentiment doesn't greatly impact risk levels, when extreme data aligns with valuation and positioning measures, it becomes crucial. If everyone is feeling bullish, what's left to push the market even higher? This might sound a bit complicated, but if you've been watching the market for a while, you might get it. When everyone thinks prices will keep rising, that's usually when the upward momentum fizzles out. Interestingly, global investors are currently sitting on a ton of cash, around $6 trillion in money market funds ready to dive into stocks. However, Grant points out that if you look at cash as a percentage of total stock market value, it's not particularly noteworthy. The cash holdings in stock mutual funds have hit historic lows, which is a key indicator of market risk. When stocks are nearing their peak, people tend to go all in, so a lower cash reserve can reflect a potential market top. You might recall Buffett's strategy. While everyone else is rushing to buy, he's been selling and stockpiling cash. This aligns with Grant's viewpoint, which is why this article is definitely worth paying attention to. Now, the piece raises an interesting question: what could shatter this sense of invincibility? Grant argues that the prevailing belief among investors that only a recession could end the bull market is misguided. It's almost like everyone thinks they have a safety net. If the economy doesn't tank, the bull run will keep going. But Grant believes that's a flawed perspective. He cites the bear market from 2000 to 2003 as evidence that recessions can actually be a consequence of falling asset prices rather than a cause. He argues that the market is assuming the S&P 500 will see earnings growth of 10 to 15% by 2025, based on expectations of ongoing economic growth. Yet, there's no reason for the federal funds rate to drop below 3% or for 10-year Treasury yields to dip below 3.5%. The market seems to be waking up to the reality that the trend of declining long-term risk-free returns might be over. If investors start believing that these rates won't keep falling, maybe even rising, then the appeal of stocks could wane. Grant emphasizes that a surge to 6,000 on the S&P 500 would mean 2024 could be the most profitable year for U.S. large-cap stocks this century. But given the growing evidence, that belief seems pretty flimsy. We might be on the brink of witnessing a market peak that could last for a while. He adds that today's invincible syndrome suggests that when financial markets shift their mindset, they tend to do so dramatically. Here's my take: if you're investing, there's a straightforward rule to remember: when everyone's riding high on confidence, it's often just before a storm. Right now, both the Chinese and US markets are grappling with the question of when the bull market might end. But unlike the optimistic tone in the US, the sentiment in China feels riskier. Investors there seem to believe two things: first, that the bull market is driven by government policy, and second, that the government still has cards to play. This leads many to think the government is backing the bull run. So when might the bull market end? Only when the government starts scaling back its policies or fails to deliver on them will people reconsider whether the bull run is over. In the US, folks look at PE ratios, bond market shifts, macroeconomic indicators, and Federal Reserve policies to gauge the market. In China, the narrative feels more one-sided, hinging heavily on the whims of President Xi, who's known for his unpredictable approach. This is why I think the current bull market in China is riskier than in the US, and it explains why international investors are largely sitting this one out. This article serves as a reminder for Chinese investors to stay alert to the risks ahead. Now let's dive into some important updates about the latest situation in the Middle East, focusing on 4 key points. First up, there's a report from the Times of Israel that's raising eyebrows. They say a drone targeted Israeli Prime Minister Benjamin Netanyahu's home, but thankfully didn't cause any injuries. This happened just a day after Hezbollah declared that the conflict was entering a new phase, with missiles being launched from Lebanon. Netanyahu's office confirmed that the drone aimed at his residence in Caesarea while he and his wife were away. He later posted a video on X, formerly Twitter, claiming this was an assassination attempt orchestrated by Iran. Meanwhile, Iran's foreign minister, currently visiting Turkey, expressed serious concerns about the potential for war in the region. Israel's military is now investigating the incident, which is quite significant given how rare personal attacks on Israeli leaders have been over the past couple of years. Moving on to the second piece of news, President Biden, while visiting Germany, shared his thoughts on how Israel should respond to Iran's attacks. According to the Al Jazeera, Biden believes there's a chance to wrap up the conflict between Israel and Iran and hinted at a potential ceasefire in Lebanon. However, he noted that achieving a ceasefire in Gaza is more complicated. While he understands Israel's plans regarding Iran's recent missile strikes, he didn't disclose any specifics about how Israel might retaliate. Interestingly, an Israeli official mentioned that since the assassination of Hamas leader Sinwar, their strategy for retaliation hasn't changed. Some analysts speculate that Israel might reconsider its response to Iran in exchange for better terms regarding ceasefire negotiations with Hezbollah and Hamas, both of which are Iranian proxies. This indicates a possible easing of tensions. Next, we have Reuters report highlighting Israel's strategic ambitions post-Sinwar's death. The article suggests that Israel is looking to solidify its gains before the US elections, aiming to reshape the regional balance in its favor. With elections approaching, Israel is keen to inflict significant damage on Hamas and Hezbollah while establishing a buffer zone to ensure its security. They're hoping to create irreversible changes before the new president takes office on January 8. Various Western diplomats and regional sources indicate that Israel's military operations aim to prevent Iran and its allies from regrouping and posing future threats. There's a sense that Biden might push Netanyahu to wrap up the Gaza conflict, but Netanyahu could be waiting to see how the next administration plays out, whether it's a Democrat or a Republican. Finally, an interesting note from Chinese social media: news about Sinwar has made it to the top of the trending charts. It's fascinating to see how differently this story is being reported. Chinese headlines are referring to him as the late Hamas leader rather than discussing his death directly, showing a level of respect. The comments from netizens often express admiration for him as a resilient figure, with some even calling for a school in Palestine in his honor. However, not everyone is on board. Some comments critique the admiration for someone labeled a terrorist. This difference in narrative highlights how the Chinese media shapes perceptions, aligning with their stance in the Middle East. This news trend gives us insight into how China positions itself in the Middle Eastern conflict, showing a clear alignment with Hamas and, by extension, with Sinwar. The last thing I want to share with you is today, major American media outlets are buzzing with a report from the Wall Street Journal that features former President Trump's recent comments regarding China and Taiwan. In an exclusive interview, Trump stated that if China enters Taiwan, his choice of words being enters, not invades, or attacks, he would impose tariffs ranging from 15% to 200% on Chinese imports. This statement comes as a notable declaration, especially in the context of escalating tensions in the region. During the interview, Trump emphasized that he would implement these tariffs if China moved into Taiwan, and when a reporter probed further about whether he would consider military options against China, Trump dismissed the idea. He claimed that Chinese President Xi Jinping respects him and that their relationship is strong. Trump joked that Xi knows he's crazy, indicating a level of confidence in his influence over the Chinese leader. Interestingly, just last week, Trump also spoke with Bloomberg, where he was asked about the U.S. response to a potential Chinese invasion of Taiwan. While he didn't directly confirm military support, he suggested that if he were elected, he believes China would refrain from such actions altogether. Reactions to Trump's statements have been mixed, with commentators from both liberal and conservative media criticizing his approach as somewhat vague or overly casual regarding such a serious international issue. Traditionally, the Republican Party has advocated for a strong military commitment to defend Taiwan, contrasting sharply with Trump's tariff-focused response. What's also noteworthy is the trend among both presidential candidates to adopt a softer tone on China as the election draws near. Vice President Harris, when asked about Taiwan's defense, highlighted Taiwan's right to self-defense while reaffirming that the U.S. One China policy remains unchanged. Her approach was notably less aggressive than President Biden's previous strong statements about military support. This shift in rhetoric from both candidates, especially Trump, raises questions about their strategies as they aim to appeal to voters, including Chinese Americans who may favor a more diplomatic stance. It's a curious pivot, given Trump's earlier hardline position against China. As the election approaches, it seems both candidates are recalibrating their messages in a way that could significantly impact U.S.-China relations. That's all for today. Thanks so much for watching. If you found this video helpful, don't forget to hit the like button and subscribe for more updates. I look forward to seeing you in the next one.